Have you ever wondered how to start stock trading? A simple question, but one that packs a lot of potential and opportunities. Hi there, I'm Coneau, and today, we're going to unravel this intriguing subject. Stock trading is a vast ocean of possibilities. It's a world where you can profit from the success of companies that you admire and believe in. It's an exciting realm that rewards knowledge, strategy, and patience. This video is your guide to navigating this ocean. We're going to start from scratch, so no worries if you're a complete novice. We'll tackle everything from understanding what stock trading is, to setting up your trading account, understanding stock markets, and finally, making your first trade. So whether you're a college student looking to make some extra cash, a retiree wanting to grow your nest egg, or someone who is simply curious about the stock market, you're in the right place. If you're ready to embark on this exciting journey, then let's dive into the world of stock trading. Before we start, it's important to understand what exactly stock trading is. Predominantly, it's the simple process of buying and selling shares or stocks in a specific company. However, to look at it just as a mere transaction would be an oversimplification. It's a doorway to becoming a contributor in the narrative of a company, to acquire a share in their potential triumphs and possible failures. When you procure a share in a company, you're fundamentally investing in a minuscule portion of that company's overall worth. You're putting your hard-earned money on the line, betting on the anticipation that this company will expand, evolve, and flourish. If this expectation does come to fruition, the value of your shares will inevitably increase. Following this, you can opt to sell these shares at a price significantly higher than what you originally invested, creating the potential to earn profit through stock trading. However, it's crucial to note that stock trading is not always a bed of roses. It carries with it a considerable amount of risk. If the company underperforms or fails to meet the expectations set for it, the value of your shares can diminish drastically. This could lead you into a predicament where you sell your shares for a price lower than what you initially invested, resulting in a financial setback or loss. So, why do people still engage in stock trading? Well, the motivations are varied and personal. Some see stock trading as a strategic form of investment, hoping to make a reasonable profit over the course of time. Others might engage more actively, buying and selling shares on a daily basis to leverage the minor fluctuations in price. This of trading is commonly referred to as day trading. There also exists a group of traders who derive a sense of entertainment from stock trading, treating it as a sort of game. They revel in the adrenaline rush of the trade, the anticipation of watching the stock market rise and plunge. However, it's important to keep in mind that despite the excitement it generates, stock trading should never be treated like a game of pure chance. It demands diligent research, strategic foresight, and profound comprehension of the market dynamics. Stock trading can indeed be a rewarding venture, but it requires that you approach it equipped with the right mindset and the necessary tools. It's not about achieving instant wealth, it's about making informed, calculated decisions and exercising patience. Now that we've understood what stock trading is, we can move on to how to actually start trading. The first step to start trading is setting up a trading account. Now this might seem daunting, but don't worry, it's a lot simpler than you'd think. The key is choosing a reliable broker. A broker is your gateway to the stock market. They'll execute your trades and hold your shares, so make sure to do your research. Look for a broker with a solid reputation, user-friendly platform, and low fees. Once you've chosen a broker, it's time to set up your account. You'll need to provide some basic information like your name, address, and social security number. Some brokers may also ask for your employment details and financial situation. This is just to ensure they can offer you the best service possible. Remember, your trading account is like your personal bank account but for stocks, so keep it secure. Once your trading account is set up, you're ready to start buying and selling shares. Understanding the stock market is crucial to successful trading. Now let's dive into grasp what the stock market really is. Picture it as a massive supermarket. But rather than purchasing groceries, you're engaging in the buying and selling of pieces of corporations. These pieces are referred to as stocks or shares. Each stock signifies a minute slice of ownership in a company, and when you acquire a share, you're wagering on company's future prosperity. These shares are essentially fractions of the company's worth. The more shares a company sells, the more funds it raises, creating resources for reinvestment to enhance growth and expansion. Companies use these funds for various purposes like research and development, expansion into new markets, or even acquiring other companies. Now, how is the price of a stock determined? It's all about supply and demand, a fundamental concept in economics. The stock price is primarily set by the market, where sellers offer to sell at a higher price and buyers bid to buy at a lower price. The interaction of these forces generates the price at which stocks are traded. If a company is doing well, more people will want to buy its stock, and the increased demand will drive up the price. On the other hand, if a company is underperforming, demand for its stock decreases, and so does the price. These fluctuations in price can happen rapidly and are influenced by many factors such as company news, economic indicators, and market sentiment. Let's venture around the globe to some of the most significant stock markets. Our first stop is the New York Stock Exchange, or NYSE, one of the largest and most influential markets globally. Then there's the NASDAQ, another US market, notorious for being a hub for technology companies. Crossing the Atlantic, we reach the London Stock Exchange, one of the oldest in the world. It's a powerhouse in the global financial sector with thousands of companies from around the world listed on it. A bit further east, we find the Tokyo Stock Exchange, a key player in Asia. And let's not overlook the Hong Kong Stock Exchange and the Shanghai Exchange, both critical to the global economy. Each of these markets operates under unique regulations and trading hours, which can affect the availability and price of stocks. It's vital to familiarize yourself with these nuances if you plan to trade globally. This requires a lot of research and understanding not just of market mechanics, but also of international commerce laws and regulations. Remember, understanding the stock market isn't merely about knowing the ins and outs of buying and selling stocks. It's about comprehending the economic factors that influence stock prices, the different marketplaces, and how they all interrelate. It's about understanding the global economy and that each country's financial markets play in it. With a good understanding of the stock markets, you're well on your way to becoming a successful trader. Now that you've set up your trading account and understand the stock markets, it's time to make your first trade. The first critical step is to choose a stock. This is where your comprehensive research skills are put to the test. It's crucial to look for companies you believe in, companies whose products or services you regularly engage with, or corporations that boast strong financials. It's important to know that the goal isn't to speculate on the next big thing, but rather to place your faith in companies that are exhibiting promising growth potential over time. After selecting a stock, the immediate subsequent step is to decide when to buy. This is where your understanding of the market trends and timing become invaluable. It's essential to grasp that the stock market is an ever-changing entity, with prices that can swing wildly from one extreme to another on a daily basis. While it's generally a good rule of thumb to buy when prices are low, one must always bear in mind that the market is unpredictable, and what's deemed as low today might be high tomorrow. Once the purchase of your stock is complete, the next step is to decide when to sell. Here, your personal financial goals and aspirations come to the forefront. If your stock has seen an increase in value and you've successfully reached your financial goal, it might be an opportune time to sell. Conversely, if your stock has dropped in value, you might want to hold on to it with the hope that its value may surge again in the future. Arguably, one of the most vital aspects of trading is managing risk effectively. Never ever commit the cardinal sin of investing more money than you can afford to lose. Protect your trading portfolio by diversifying investments across different types of stocks. Always be vigilant with an eye on your investments and the prevailing market trends. One of the most important pieces of advice for any trader is not to let emotions steer your trading decisions. It's important to remain calm, rational, and make well-informed decisions. Remember, stocks is not a magic potion for instant wealth. It's a long-term commitment that requires an abundance of patience, discipline, and continuous learning. Inevitably, you'll make mistakes along your trading journey, but that's an integral part of the learning curve. Learn from those mistakes and continuously strive to improve your trading strategies. It's not an easy path, but the rewards can be significant when done right. With your first trade under your belt, you're officially a stock trader. Remember, practice and patience are key to success in the stock market.